Hi, this is Ian Coleman from PIA-first. This is the video analysis for the FXMajors and the dollar index for the week 25th June 2018. Got some interesting moves, some bottoming formations, what we believe are bottoming formations anyway, in sterling dollar and euro dollar last week, and also Aussie dollar. Dollar CAD could also be forming a top. So we're going to break down the time frames, highlight what sort of medium term levels that we're looking at, formations, etc. So first of all, we're going to go to the dollar index DXY, breaking down through the time frames, highlighting what formations we're seeing this week. So the monthly chart, not really much to take away in this time frame. We're in a bullish channel formation. You can note that we've seen a stalling in price action very close to a level that's been pivotal really since 2015, and that's 95 the figure. So if we look over here, it was support, then became support again, and then on two occasions since it's become resistance. If we go to the weekly chart, and those that have seen our videos before will note that we've been talking about this level here, this 95.85 level, for quite some time. Possibly a bearish head and shoulders formation over the long term. Short term, we've seen all of last week's initial gains overturned, and we've actually closed with an inverted hammer on the weekly chart. If we go to the daily chart, here we can see this was where we believed we were completing a fifth wave. So this is wave 1, 2, 3, 4, and then 5. However, this strong buying, that was basically after the ECB on the 14th of June, resulted in that level being taken out. And you could say that this is now the fifth wave, or possibly a fifth wave extension, and we're now looking to move to the downside. But this candle here, this very bullish candle, like I said, was on the ECB day, is quite an important level at the beginning of, or candle I should say, at the beginning of next week. So we're just going to highlight that on the 4-hour chart. So we've got a Marubozu level, which is the midpoint from the open and the close of that candle, of that daily candle. That comes in at 94.19, and we've then got our bespoke support at 94.18. So although our bias is now over a medium term flipping to the downside, short term we could see a bounce higher in early trade at the beginning of next week. So we've got to highlight that, or keep that thought in the back of our heads when we're looking at the other dollar majors and forecasting where we think we're going to go this week. So the dollar index, medium terms flip to the downside, short term support at 94.19. If we see bounces at the beginning of the week, we're going to look at selling into them. So euro dollar, bearish channel formation, stopped, reversed, close to the 38.2% pullback level at 125.22. We've since moved lower. Again, this was resistance, now becomes support. Not a great deal to take away from this time frame. If we go to the weekly chart, we've posted a DMARC 13 on the weekly chart. That's often an indication that the current trend is coming to an end, and we should at least see a correction to the upside. Now the DMARC stop, which I actually highlighted here, is actually projected at 112.90. So we don't really want to be looking at taking long trades with stops down at those levels. But we've also got a 261.8% here extension, which is located at 114.90. If we go to this chart, a possible bearish head and shoulders formation, so a left shoulder head, and then we move higher towards 120.20 to form this right shoulder before we expect the sellers to start to return. So here we've actually got a 5-wave sequence here. We've got 1, 2, is 3 and 4 are hidden here, and then this is the 5th wave, and now we're looking for this choppy move to the upside. The daily chart, here we can see the 261.8% extension far better. We've got bullish divergence posted on the RSI. So basically the chart makes the same low, but the relative strength index makes a higher low, and that tells us that this last move is not as strong as this move basically, and is often an indication that we're going to see a correction or a move in the opposite direction. So bullish outside day posted on Thursday. We've seen continuation of that uptrend on Friday. We are close to some intraday bespoke resistance. We've also got a Marabuzzo level again, as we were saying, from that 14th of June. To the downside, we've got support at 116.16, which we're looking to buy dips around. And then to the upside, our first resistance is round about here, which is 118.72, our bespoke resistance level. But it's also this trend of higher highs, so we think that's going to be quite relevant going into this week. So scope for a mild sell-off at the beginning of the week, but we're bullish in a corrective formation on euro dollar over at least the next couple of weeks, I would have thought. We're not going to use all the time frames now. We're just going to go to sort of the weekly and the daily, and then these intraday time frames to try and highlight quite good support and resistance levels. So the weekly chart in cable or sterling dollar surpassed the 261.8% extension level at 142.11, posted a bearish outside week, moved aggressively to the downside, broke the channel formation to the downside, but we've stalled here at the 50% pullback level, and in fact all of last week's initial losses have been regained. To the upside, we've got reverse trendline resistance located at 138.90. If we go to the daily chart, similar picture to sterling dollar in the fact that we've got a demark exhaustion count, but the exhaustion count on euro dollar was on the weekly. It's actually on the daily on cable. So again, was this a fifth wave extension, just surpassing the 131.76 level, which is a 261.8% extension? Bullish divergence again, possible fifth wave extension as far as Elliott wave is concerned, and then we've moved to the upside. Next week we've got support at 132.20, and that is close to this previous swing high as well. Swing low, which was at 132.05. So we are looking for losses to be limited. In fact, if we go here, we can just see that last leg, very choppy last leg of that Elliott wave formation. And if we look back here, we can see that we've got previous support and there's scope for mild selling, but we think these losses will be limited again in sterling dollar. Dollar Swiss, not as easy, if you like, to highlight what's going on in this currency pair. Euro Swiss are actually bullish, so we're not as bearish in dollar Swiss as we are bullish in euro dollar, if you see what I mean. Normally they're very close to -1 correlated. In other words, dollar Swiss goes to the downside, euro dollar goes to the upside, but we have got that euro Swiss aspect, if you like, where we take the two currencies, and we still think that euro Swiss has got scope for a larger correction to the upside. So we're not as bearish in dollar Swiss for this negative dollar move. If we look here on the monthly chart, we can see again this level, this area has been pivotal. Obviously a psychological big figure for the last 2 months, and we are getting towards the end of June. We've seen little net change really, making intraday or even medium-term calls pretty difficult in this currency pair. If we go to this chart, which is the weekly chart, we saw mixed and volatile trading, formed an expanding wedge formation. Normally we'll break to the upside, retest, and then move higher towards the measured move target, which is around about 103 the figure. However, we have bounced, retested, but this rally has stalled. We've got support at 98.35 next week, and then this reverse trendline support at 98.12. If we break there and clear it to the downside, I think we're going to see further losses. And in fact, if we just take this off, this makes it a little bit clearer. And then we've got a potential for losses down to here, which will be the channel base, possible reverse bullish head and shoulders formation around about 94.50. So this would be the left shoulder, this would be the head, this would be the right shoulder, and then this in turn would be the neckline. So it's quite essential really this level 98.30, 98.10 at the beginning of next week, just to see what happens and whether or not we can break higher in dollar Swiss. Dollar yen, weekly chart in a bearish channel formation. We've had sort of a prolonged period of consolidation, if you like. It's 4 or 5 weeks where we've really seen little net movement. Channel resistance is at 112.15. I think the most important time frame here is the daily chart. Okay, moved higher, stalled, reversed, close to the 261.8% extension level, which was at 110.87. Move lower, again dips were bought into. It's very choppy price action, but with this strong sell-off on Thursday last week and our bespoke resistance level holding on Friday, which is at 110.17, we're looking for a larger ABCD correction to the downside. So in other words, this is the impulse move, then this is the choppy move to the downside. There's a ABCD target level around about 107.70. Dollar CAD, two ways again to look at this. I'm really interested to see price action at the beginning of this week because I do want to get short of this currency, or this currency pair, I should say. The monthly chart highlights a clear breakout of the wedge formation to the upside. The measured move target is up here, 147 the figure. So this time frame is bullish. If we look to the weekly chart, that's basically the ending wedge formation. However, we've got this inside wedge, and on last week's video analysis, we did say 132.54 is an important level to watch because we've got our bespoke resistance there, we've got the trend of higher highs in this wedge formation, and we've managed to close basically at that level. So is it a false breakout? Are we going to see a stronger correction to the downside? Are we going to see this wedge breakout instead, and this one being a false breakout? So yes, it is a mixed picture, but the daily chart highlights an outside day. So basically it made new highs, it then completely reversed the initial price action after the Canadian figures on Friday, and it's engulfed and moved back inside this wedge formation. Now the reason I've highlighted this here, 132.52, is because that's our first bespoke support level. Now if I go to the 4-hour chart, this is going to be 132.52. If we bounce there, then I'm looking for the correction higher to then be limited, and I'm going to be looking around about well, in between here basically. 61.8% pullback level is 133.33, also close to a previous swing high. So maybe a disjointed head and shoulders pattern, so head, left shoulder, right shoulder on a bounce, or we just get to this level. So I'm interested to see price action at the beginning of the next week, just to see whether or not we get that bounce off our bespoke support, and then if we do, I'd like to sell into early rallies at the beginning of next week, or tomorrow basically. Aussie dollar, I'm going to show the big time frame here. A very prolonged period of mixed volatile price action. Ishimoku cloud, or levels inside the Ishimoku cloud, were sold into. The long-term bias should be to the downside. We're sort of 0.5 the figure, looking like a target level for the expanding wedge breakout. But if we go to the weekly chart, is this the end of a fifth wave? So basically 1, 2, down in 3, small up in 4, and then 5. Is it not going to extend to the 71.35, 261.8% extension level? We did note a couple of weeks ago 76.19 was our bespoke resistance, and then we noted this reverse trendline resistance at 76.75. But we really need to break down into shorter time frames to find out what's going on in this currency pair. If we go to the daily chart, channel breakout to the downside. Again, we've highlighted a demark. The stop was at 73.66, so that was taken out, so that count has basically disappeared. But We've got a double bottom formation which has been confirmed. In fact, we'll go to the shorter time frame, the 4-hour time frame. We've got a double bottom formation, bullish divergence once again, broken the high which was here, so that double bottom formation is confirmed. We've got bespoke resistance at 74.76. We've got bespoke support at 74.02. So dips we're looking to buy into, and then obviously targeting this level going into this week, which again has been quite pivotal for May and June of this year. Euro sterling, mixed volatile price action. I mean, there's a lot of fundamental reasons really why euro sterling is consolidating, because there's basically Brexit fears which are swinging one way to the other, and we've also had a lot of volatility in euro dollar as well, so, or in the euro I should say. At the moment we've had 48 days of mixed and volatile price action. The fact it's still holding on to this line here, which is 87.28, which is a trend of higher lows, does suggest that this is an ascending triangle formation. So in other words, this formation gets squeezed and squeezed and squeezed, and then eventually it has a bias to break to the upside. Beginning of next week, we've got support at 87.72, which we're going to be looking at for at least for our intraday trades. Also, a good idea to look at an indicator or an oscillator when you do see these periods of consolidation is the RSI, and I've just highlighted this 50 level here, so you can see really for quite some time, or 48 days in fact, we've just gyrated around this 50 level, which is the midpoint, and that's a clear indication that there really is no trend in euro sterling at the moment. Euro yen, again we'll just break down the higher time frames. Marubozu level, which is the midpoint from the open and the close, it held, moved to the downside, but now inside this Ishimoku cloud again. It sometimes results in shorter time frames having very volatile and mixed price action, and I think that's really what we're seeing in euro yen. If we go here, which is the weekly chart, our bias is still to the downside, but the fact that we've had now 4 weeks with little net movement again, if you take this as the midpoint, we spiked all the way lower, higher, higher, lower, and then we're just consolidating basically around here. We've got some bespoke support at 127.96, and then we've got trendline resistance at 130.92. So again, medium term outlook is pretty mixed with a mild bearish bias in euro yen. If we go to the daily chart, we can see obviously this area has been quite pivotal. We've got a Marubozu level at 129.04 at the beginning of next week, and then we've got our bespoke resistance here at 129.82. If we go to the shorter time frame, bespoke support is at 127.88. We've got some trendline support at 127.82. So is this going to form what I believe is a very disjointed reverse head and shoulders pattern? So left shoulder, head, potential right shoulder. I don't really like the formation. Going to have a look at price action at the beginning of next week to see if this cross currency can break higher. But on a medium term outlook, and this is really a medium term report, it's pretty mixed at the moment, and we'd actually prefer to sell rallies at higher levels than to be buying dips for a potential bigger correction to the upside. Okay, I hope you enjoyed the video analysis. We'll be back again next week covering the FX majors. Okay, thanks very much. Bye for now.